Good morning, everybody. It's Monday, April 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn down 6 at 472 3/4. May soybeans are down 5 3/4 at 1044. And May Chicago wheat was down 11 1/4 at 518 3/4. No export sales announced here this morning, so we'll jump right in. Got pretty good planting weather for a majority of the corn belt here, so we should see a pretty good jump in crop progress here this afternoon. Still got back and forth and conflicting reports out of China, so nothing real new to report there. And it seemed like over the weekend, Trump put kind of a little more of a time frame on getting a deal done with Russia and Ukraine for peace. He's hoping in the 2 to 3 week time frame. So we'll be watching closely to see if something comes out there. Other than that, another week here, guys. Dustin, maybe a few thoughts here as we start the week, and then we'll throw around the room.
Yeah, I think more planting progress over the weekend is always going to probably set some people slightly negative going into the week, just because you tend to get a lot of people say, "Oh, now I've got it planted. What do I have marketed? What am I going to sell?" So I think the grower may be a little bit weighing on the market, stronger dollar as well. But I think it's also, we have to remember, first notice day weakness is a thing. I think, there shouldn't be a lot of open contracts to pressure the market, but it tends to be, especially on a day like today and tomorrow, 2 days this week prior to first notice day, there may be a little bit of that pressure happening as well too.
Oh, very good. Justin, what's on your mind here as we start the week?
Yeah, we're obviously weather's been improving, I think, in Brazil for the Safrinha crop as well. We do have some issues in China, but that's China's just the whole thing, right? It's hard to know anything out of there, but it has been dry there. It's been really good in Brazil, so I think people are going to be notching up the Safrinha crop estimates, right? That's something that we've talked about for months. Is one of the positives to corn is you have to grow a big Safrinha crop, and right now they are. And we're planting here at a good pace, getting some good rains in areas that needed it, those kinds of things. So right now there's not a lot of positives, I guess, to get the market going. We're basically mid-range from the lows that we saw earlier this year to that 480 number. So we're kind of right in the middle here at 450. We're at the 200-day moving average overnight. So kind of just mid-range, I think, just taking some premium out of the market. If you think there was premium, any kind of weather premium. So yeah, I think we're just kind of range bound right now. I think to go make new lows doesn't make a lot of sense. To go make new highs that we saw, to go above, let's call it 480 in D's corn or below 430 doesn't make a lot of sense to me right now for what we know. And I think we're just kind of stuck here until we get kind of more data. If we had planting delays or if we had something, I think you could have pushed above those highs, or, there's just nothing exciting right now.
Sure. What I know it's hard to know, but I mean, what's your impression with the funds continuing to buy beans with what we know fundamentally about beans? I mean, is there some underlying things there that maybe they're looking at, or what's your thoughts there?
Yeah, good question. I mean, crush margins have increased mostly due to soybean oil, going up. We had tested 50 cents last week. I commented on it, I think Thursday, maybe last week, but we went from the cheapest oil in the world to kind of back to a normal type premium, so we were way too cheap at 40 cents. The market liquidated into that. We were selling a lot of export soybean oil, to India and other places. Now, with this rebound, we kind of got to a normal kind of price relationship. I think that probably put some buying in the bean market with crush margins improving. And I think maybe the combination of the, bean corn ratio getting kind of on the cheap end of things. Dustin mentioned, the real, having a nice rally. I think all those things kind of added to support for the soybean market. So I think it's just kind of a combination of things. It maybe got too cheap to corn. Oil definitely got too cheap, and now things are kind of back in balance. I mean, you look at, we kind of testing those big moving averages as well. Like we poked above the 200-day for the first time in a long time. So
there's probably the perception too, right, that we're losing some bean acres to corn.
Yeah,
with this weather is probably part of it.
Yeah, it'll be interesting because a lot of the people that I know, and I think we all know that, plant beans first now.
Mm-hmm.
Right. So the old adage that, when planting goes fast, you plant more corn, because we used to plant corn first. Now the price action, right? You would say, corn definitely gained on beans during that time frame. So I see why you can make that argument, but I'm not sure it's 100% as correlated as it used to be, call it 10 years ago. Because now, like for our farm, for example, the first 800 acres were soybeans that we planted this year. It used to always be corn first, right? So people they see a bigger yield benefit to planting beans early in a lot of places. So not saying that's not right, but that's definitely, I mean, I agree that's the perception right now. I'd be curious to see what actually happens. Problem is, by the time you find out, it's usually over, or it'll be June 30th or whatever. So
yeah, I talked to a lot of customers, and it seems like the guys who run like one planter tend to maybe go harder on beans early. If you're running two planters, though, it seems like a lot of guys are, you're running one corn, one beans, and so just trying to take advantage of the good weather before.
Well, have you guys heard of anybody planting more corn?
I mean, I heard before we got through that March 31st report.
I meant just since due to planting conditions, saying like, I'm going to plant more corn because of
changing it up. Yeah.
No,
I don't think so.
No. The one chart I wanted to show too, because I think this is very related to this, is I think the market is saying exactly what Jason said, though, that the expectation that there is more corn acres. So this is a little bit of a confusing chart, but basically you have the price of corn in black with the axis on the right, and then you have the price of the spread to the next growing season, the D26 growing season, in blue with the left axis. So like these things have correlated so well from last October all the way up through March, and then we deviated there after we got two pieces of information: the planting intentions report, which showed a lot more corn acres than people expected, and also the trade war. And I think that this is related to the idea that we're going to have a lot of corn acres in 2025, and the market's telling us that, because we're going to naturally rotate out of corn and back into beans in 26. So what does the market do? 26 corn performs better, right? So you're starting to see this deviation, but the spread is not going at the same pace as the flat price anymore. It's actually getting weaker. The front end of the market's actually falling at a faster pace than it had been before. And I think that's also saying the same thing for beans, is that beans are actually going up against corn through that same time frame. We're back up to a 2.291 ratio. So I do think it's the market's perception that we are going to get a lot of corn acres is what that chart's telling us. So
yeah. I mean, we already, on the March 31st report, already got a lot of corn acres too, right? So even if you don't get more, you still have a lot.
Well, it's basically pricing in the March 31st report. Yeah, that's what I'm saying.
Yeah, and it's we talked about this for a while. The spreads were pretty narrow. If we go back to 2 billion plus carry out, you should have good carries in the market.
Yes.
I think your point about the real going, I think there's several things. Like I think the real going up, the dollar going down, all these kind of things kind of puts an underlying bid to the flat price. But if you have good stocks, you should have, you could argue that flat price is too low and spreads are too narrow.
Right.
No.
Well, I think that's the point too, because we're up from the March 31st report. We're up from the announcement of the trade war.
Flat price.
Flat prices.
Right.
And
Right.
But the spreads are also wider, which means that the D26 corn crop rallied at a faster pace.
Yeah.
In both of those scenarios, right? It's not just more corn acres, because that would generally just be bearish corn. It's actually been fairly friendly flat price, and the spreads have widened. So it's a combination of both things, right? The real and the corn acres probably. I mean,
yeah, and those spreads, if we do have a good growing season, and let's say acres are here or higher for corn, you could argue that those spreads need to go to the widest they've been in a long time.
Yeah.
Because you have these government mechanisms, right? Call it crop insurance, farm bill, all these things that could keep flat price supported, but also still build a carryout that's, in surplus.
And interest rates.
Interest rates are high, right? So a lot of these things could add to, some things that we haven't seen for a couple of years.
Ben, any final thoughts here on the grain side as we start the week?
And I think we touched on it. First notice day, Wednesday, a good planning pace. I hope that it's not enough negativity to kind of trip up some of the positive developments we've had in price action, particularly in beans. Been very solid there. And then corn's kind of struggled back and forth around some of the intermediate moving averages, but trying to turn up. So got to fight through the next couple of days and see where we wind up. I think there's probably somewhat of a reluctance to be too aggressive on the long side, even with take away first notice, they take away planning pace. I think uncertainty over what's going on as far as trade wars and stuff go may keep them with their hands in the pocket a little, unless something really turns quickly, which can always happen in a growing season. So I think next 2 days, probably going to have to throttle through a little bit of heavy markets and then see where we come out of it.
Very good. Mylon, we got a couple minutes here. Let's move on to livestock here quickly. It was interesting letter from Ag Secretary Rollins to Mexico that if they don't get this screwworm issue resolved by April 30th, that they're looking to maybe close the border again. So that'll be interesting to get some of that reaction. We saw that at the end of last week. All-time highs in cash, slowing down on the slaughter side. So all this stuff getting thrown at cattle should be pretty interesting. And then saw a big jump in fund buying in hogs towards the end of the week as well. So I guess kick us off with your thoughts as we start the week.
Yeah, absolutely. I mean, we've been seeing this, the expectation was for kind of lighter slaughters, and we're certainly starting to see it now, at only 555,000 head last week. So, obviously cash trades record highs, and the idea is that beef prices are going to stay pretty well supported here just from a packer margin standpoint. We saw choice up 278 and select at 376. So we'd imagine that this trend is likely to continue for the time being, unless we finally hit that price that somebody says they won't pay. But at this point, just have not seen it yet. And we're still kind of working through these tight supplies of cattle and how the industry is starting to really try to adapt to. So once again, $3 higher in the South, $4 higher in the North for live. So like I said, I don't think there's any real reason for this to stop unless we're convinced that beef prices are just going to seasonally start to drop here. I think that's going to be the bigger risk in the future. But as of right now, the weather's good. Temperatures are warming up. I think we're expecting, grilling season demand to start to increase with that. So, and then on the other hand, you're getting like you said, we saw that Secretary Rawlings putting forth that they're going to put some more restrictions by Wednesday. The feeder market, we'll see this likely is pretty friendly. It could be kind of a wait and see thing, but on the other hand, obviously this is a hot button issue. We don't want any screwworm in this country. So if they're going to need to either follow suit, or this could really propose a problem, with the flow of cattle into this country. And we need that right now. So obviously this is going to be something developing that we're going to have to pay attention to, but the market's going to see that as pretty firm. So overall, we've seen funds, in the specs kind of pretty active buyers in this market as well. Mainly the hogs. Like I said, seasonal demand starting to pick up here. They had about 18,000 contracts last week, so I mean they are back, baby. We are seeing just slight upticks in cash towards the end of the week, but overall cash was really strong on the hog side. So I mean it just seems like we're in these kind of seasonal throes of optimism right now. Bellies were up 975, carcass was up 218. So still more of the same here. I think there's going to be a lot more eyes on things that to interrupt this kind of mentality, which is Chinese related headlines, Mexico, Canada, that kind of stuff. But we really didn't get anything over the weekend. So I think we're starting off on a pretty good note.
Very good. Yeah. And as we talk, Mayfeeder's up a couple bucks here to start this morning. So a little bit of early strength here. Grain markets, May corn's down 6 at 472 3/4. May soybeans are down 5.5 at 1044 1/4. And May Chicago wheat's down 12 1/4 now at 517 3/4. One thing to note, we will have crop progress and conditions 3:00 Central. So we'll take a look at that, talk about it tonight, and then certainly visit about it tomorrow's War Room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every morning that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.